Next, we turn our attention to India's inclusion in JP Morgan's emerging market bond index. Does this mean India is on the brink of a finance breakout moment? What does that mean and why does it matter? Take a look at this next report.
Starting July 28th, the long sought-after opportunity for foreign investors to tap into a substantial growing market will finally be available to them. The world's most populous country has not been completely connected to the global financial system despite having the fastest growing major economy. India is poised to receive billions of dollars in investment as it is set to become a member of JP Morgan Chase's Emerging Market Bond Index, considered a sacred ground for some on Wall Street. The timing of India's inclusion in the index couldn't be better as other developing countries are experiencing upheaval. Russia is no longer an investable investment and China appears to be showing signs of fatigue. This signifies the highly controlled $1.3 trillion Indian government bond market would be open to international investors for the first time. The inclusion of the country's debt in the index, according to Goldman Sachs Group, may lead to global investment of up to $40 billion. Banks will be incentivized to lend more money to companies and keep finance costs down if foreign inflows help the government borrow less money from domestic investors. This will mean cheaper loans for everyone at a time when household budgets have taken a hit from high interest rates. Conversations on inclusion started over a decade ago under former Reserve Bank of India Governor Raghuram Rajan. However, Indian officials were reluctant to open up the debt market. Back then, they claimed that doing so would expose the nation to dangers posed by foreign flows that could affect domestic interest rates. Then, the pandemic hit, and the government had to borrow more money than ever before to pay for stimulus and record borrowings. Foreign investors were allowed access to a large portion of India's sovereign bond market in 2020 by the RBI. In October 2021, JP Morgan added India to the watch list. However, discussions came to a standstill because New Delhi was unwilling to offer tax incentives to foreigners. Investors' desire for diversification in the face of sanctions on Russia and China's economic troubles most reignited the discussion. Eventually, India ceded to tax reductions for foreign investors. With GDP growth above 7% in the most recent fiscal year, India joins the index in a strong position. Business Bureau WION, World is One.